this entire year, my best performing underlying for me personally has been the bond market. Usually it's the stock market and things like that, but rarely is it the bond market. In 40 years of trading, I don't think the bond market's ever been my best performer. But in 2025, first half of the year, the bond market's been my best performer. I have only traded it in one direction, meaning the bond market's kind of near its lows, but all I've done all year is buy it. So when bonds are near their lows, that means interest rates are a little high, and I've been betting that they're going to go lower. They have not gone lower, but the bonds really haven't gone anywhere. And as a premium seller, there's been enough movement that every time the bonds rally a little bit, we're able to collect some premium and then move on to the next trade. It's worked all year long. So I'm not complaining about the bonds. I want to preface this.
All right.
No complaints
here. This is not
no complaints. Okay. I'm just a trader. No complaints. It's worked all year long.
A guy just sitting by his computer, not complaining.
That's exactly right. So there has been a lot of talk out of Washington about the deficit.
This is people are saying? This is talk from people?
I watch a lot of social media, TikTok and Instagram, things like that. And there's a lot of talk about, there was a lot of talk about the big ugly bill. And there's a lot of talk about, different, the whole legislative process of pushing that thing through. And then there was a lot of talk about the, what the impact it would have on the deficit and all this kind of stuff. And the stock market shrugged it off. Didn't care. We're 6,300. We're within a tick of record highs. Stock market couldn't care less. The flip side is the U.S. dollar basically crashed. So
tell me a story. I gotta tell you.
Yes. Okay.
Okay.
You know that better than anybody else.
I got problems.
An American living overseas has felt the pinch. You've lost 15% of your buying power.
Let's just say steak night has been canceled.
It's pasta for you. It's pasta fagioli for you.
I'm back on macaroni. I'm sorry to say.
That's right.
Thank you, Mr. President.
So the U.S. dollar's crashed, and the bond market, although there's these, probably the most talked about cuts for an entire year now, the talked about cuts that have never come. There's been this incredible, nonstop discussion about 2 rate cuts this year, 4 rate cuts next year, 6 rate cuts, whatever, 3 this year, 5 next year. It doesn't matter. It's all just garbage.
Pick your poison.
Pick your poison. Pick your story. But yet the bond market keeps going down. It's up a full point today. It was down, almost a full point 2 days ago. It's up a full point today. Like we've been all year, we're long it, so it's a good day in that sense. But the bond market's still on its butt. The long bond's 114. The 10-year is 111. They're nowhere fast, as we would say. Okay. And so there's a lot of theories out there, a lot of stories. One story is, and this would be the Jay Powell kind of, I'm just going to summarize it, which is essentially tariffs, tariff uncertainty, inflation still on the table, can't lower rates yet. Okay, that's the Jay Powell version. There is the trader version, which is, they've crushed the dollar so much that all the foreign buyers, you'd have to be crazy to buy U.S. bonds right here, because not only are you taking risk, you're taking dollar risk. You have principal risk on the bonds,
and
but then you have currency risk.
You're getting a double jammed. It's a double.
You're getting a double. You're getting a double jammer, and the currency risk. The currency risk is legit. The currency risk has been 15% when the bonds pay 4%. It's a death trade.
That's called losing money where I come from.
Death trade. And we're talking about, whatever size market you want to argue it is. 35 trillion, 45 trillion, 50 trillion. It's a massive market.
Don't they call it the biggest market on earth?
Well, it depends if you
Is it the U.S. bond and currency market the biggest capital pool in the world?
It depends who you talk to. If you throw in derivatives, I'd say no. If you exclude derivatives, I would say yes. It doesn't matter. The point is, it's 50 trillion, give or take 10 trillion, one way or the other. Okay, it's a massive market.
It's a big honking piece of market.
So I'm sitting here watching this market, saying, okay, Trump's out there saying, Jay Powell's a moron. He's not a moron. Okay, we know that. He's not a moron. He's saying he's the worst ever because he won't lower rates. And I don't know if Trump understands or not, but you can't lower rates when bond prices suggest that if anything, you got to raise them. That's right. So that's the challenge.
That's a math issue.
It's a math issue. And with the dollar doing what it's doing, I mean, the Fed can't just lower rates. The Fed has to respect whatever the market is actually doing. And so we're in this difficult situation. So I'm starting to think, okay, you've got stock prices at record highs. You've got dollar near, multi-year lows. You've got bond prices hovering on the low end of the range, even though they have multiple cuts coming. Mm-hmm. What's going on here? What's the outlier case? What is the all ugly outlier case? Now, you have to relate that to the person in charge. Mm-hmm. The current leader of the free world, and I put air quotes around that, but the current leader of the free world, Donald J. Trump, has a history. His history, and again, I'm going out there today, far-fetched, whatever you want to say, outlier, what is the 1%, 2%, 1/10 of 1%? Why are these bonds so heavy? What is the creepiest story I can tell? And you have to think about who's at the top of the food chain now, and what has been he look, you can say whatever you want about Trump. He's not the sharpest tool in the shed. He's not the brightest bulb. He has one MO. His MO has always been, okay, borrow as much as you can. You can see it in his bill this time as well. Borrow as much as you can. Doesn't matter how much you pay to borrow. And if it doesn't work out, just default.
Sure.
Okay. I mean, the number of times.
It's almost always default.
Yeah. Trump's first default, just to give you a little background, his first default was in May of 1984. So we're going back 40 years. Okay. That's when he opened his first casino in Atlantic City, bankrupted. April of 95, bought another casino, bankrupted. January of 88, bought a yacht, bankrupted. March of 88, bought the Plaza Hotel. These are just things. Then he bought the Taj Mahal. Then he bought an airline. These are all the things that went bankrupt. Okay. Then he missed all the interest payments on the Taj, took that bankrupt. Then, there was a bunch of different things throughout time. Trump Castle, Trump Plaza, 1992, all filed for bankruptcy. Taj Mahal filed for bankruptcy in 1991. And December of 1992, the Plaza Hotel filed for bankruptcy. There's just a lot of things. And when you start to go through the whole list, and there's just a gazillion lists out there, of all the different bankruptcies. He's got an MO. He's got a story. So the question becomes then, do you think that Trump looks at the U.S. right now and looks at looks around and goes, hey, I got a game plan here. You know what? I'm not going to worry. I'm just not going to worry about the size of the deficit because I'll just, little sovereign wealth default and we're good.
So
now I've got a lot more to say about this, but I'm throwing it out there for your opinion.
I think first of all, unfortunately, what I'd like to say is this is a stupid topic. This is idiotic. I don't want to talk about this because it's so far out.
Okay.
Unfortunately, the track record of the president and the level of compliance that the president has with the legislative body So for sure, we have to separate two things here. One, does Trump have a history of recklessly borrowing money and bankrupting things? He's maybe one of the most successful people in history at taking massive amounts of debt and running it straight into a tree. What both of those previous bankruptcies, as well as with this, we'll get to the current situation, you do have to ask yourself what the lenders are thinking every time he comes under the room to pick up another line of credit, and they re-up him. It's remarkable. But that's which brings me to the current situation, which is knowing the president's relationship with risk and leverage, which is he is indifferent to risk, will take risk at any scale, and indifferent to leverage because he looks at default as a business resolution in any situation. It's not considered a negative outcome. It's just considered one of the many outcomes that are available, and in his case, a frequent outcome. And maybe we're going to get rich together. Maybe we're going to go broke together. No matter what, we're going to do it big. We're going to do it hard. We're going to get a private airplane. We're going to eat some caviar along the way. Maybe go shopping at let's get some Italian cashmere going, something nice, get some nice clothing and see what happens. And that's one thing when you're dealing with your own money or the bank's money. It is obviously an entirely different thing when you're dealing with the most powerful currency on earth and the most powerful country in the world. Which brings me really not to Donald Trump, because obviously Donald Trump will take whatever amount of risk. Here's one of, I'm just going to back up a little bit because I was on CNN last night talking about some of these things. I'm going to be on MSNBC later today. I'm going to be back on CNN again tonight. So I'm doing this sort of little New York media tour. And one of my sort of big message as a preview going into tonight's appearances, I think we are doing ourselves a disservice talking about, I think the Trump talk hurts us because the conversation I really think needs to shift to America and the Republican Party. Trump is what Trump is. I mean, you've said this a 1,000 times. Trump obviously is going to do leverage. He's obviously going to take risk. And unless some regulatory apparatus, whether it's a bank lender or the legislative body of the United States, intervenes, it's going to be a catastrophe. There's not even a question in my mind about that. And so I really think that the biggest issue right now, I think that talking about Trump all the time actually gives the Republican Party a pass that they don't deserve, because I think let's assume that there's a 0.01% chance of a sovereign wealth default in the United States, as expressed by the 50% currency decline and all these other things. The fact that there is even a credible conversation to be had in a credible podcast such as Truth or Skepticism about a U.S. sovereign wealth default, as if we were Chile or Greece or whatever, the Mexican peso years ago. The fact that that's even a point of discussion is so alarming in and of itself. The fact that that's even that isn't dismissed out of hand as a stupid topic to talk about is so alarming as to, I think, really direct a huge amount of attention at the Republican legislative body's obligation to America to prevent this from happening. And I think that we need to shift our attention away from the president and to the United States of America.
I don't disagree with you.
The Republican Party. So is there a risk of a default? Yes. And so I think that the real question becomes, what has to happen to wake up the Republican Party to intervene?
I don't know the answer, but there's
how bad does this have to get? Anyway, sorry, go ahead. I'm interrupting you.
All I was going to say, Dylan, is that there's a reason that, because the dollar is so weak, there's a reason to say that there aren't international buyers of our bonds now. And it makes sense because of the weakness in the US dollar and just, it's a negative arb. But, and I agree, this should not be about Trump, but nobody else in the Republican Party could even suggest this or pull this off. It's not on the table anywhere else. The only person that could, Trump has a legion of cult-like followers that will, if he says jump, they jump. And couldn't you see a situation where he says to China, listen, we're just not going to repay you. We're not going to make these bonds any good.
Obviously I can see that. I can see him saying that. Sure. But upon saying that, I can see a repricing of the U.S. dollar in the U.S. bond market that is so catastrophic and so violent to make what happened in April with the tariffs look like an unchanged day, and I can't imagine that it would ever be consummated. Like I believe it would, that I think there's probably a 50% chance it gets threatened or mentioned or bandied about. But if it's done so in a way that it has any credibility, I believe both the dollar markets and the bond markets reaction will be so violent so as to force a total intervention from the top of the corporatist wing of the Republican Party, meaning
yeah, I'm listening. Keep going.
Meaning Jamie Dimon, meaning Lloyd Blankfein, meaning David Solomon, meaning Jeff Bezos, meaning all of the sort of sycophantic super billionaire CEOs. Will jump in with whatever portion of enough of the Republican Party and all of the Democratic Party for political reasons. The Democratic Party, I don't think is very bright, but I do think that you could probably break off a chunk of the Republican Party. The Democrats would fall in line just because for political reasons, and that would be that. I mean, I guess it's a long way of my saying for sure I believe it could be threatened. I can't imagine it would ever be consummated.
No, but for people, the only way it's consummated is people that don't believe in globalization and they believe in an isolationist policy that everything, it's an America first thing. You don't care what happens to the dollar if it doesn't have any context with the rest of the world. And that's kind of one of the reasons that it's been talked about. And, you're also talking about, you're making very fair points. But if I had said to you, 10 years ago, is it possible for somebody to run for president and not to be able to accept the fact that they lost?
Not even a point of you wouldn't. No,
of course not.
Right.
Of course not. So what we're talking about here, it's unimaginable, unthinkable that somebody can run for president of the United States and could never admit defeat. So doesn't believe in free and fair elections, and you're worried and you're saying, well, that same person isn't capable of defaulting on bonds held by Chinese government or held by, Russia or held by the Japan or held by some other country where he doesn't care. I'm just saying there are things that have happened in the last couple of years, certain denials of things like due process all the way through to election results that in the back of your head, you have to say, you know what, I might not put this past them.
I'm not going to disagree with that. Obviously, that sort of the evidence says you're correct, but he also did leave the White House.
Yes.
So just because he didn't believe, and so I guess what I'm getting at is the distinction between the attempt not to relieve power as the president, or the attempt to default on the debt. I think is a reasonable, a reasonable chance. But I believe the actual, I think the actual default is an unreasonable chance. I think but I think the fact that this is even a point of conversation brings us back to, from a trading standpoint, should you be short the dollar from here? By the way, not to be pragmatic on this.
No, actually, I'm long the dollar here and I'm long bonds. But again, you're talking about a president that has said, A, I hate the other party. B, the chairman of the Fed is a moron and I can do a better job. Okay. And then you're wondering to yourself, does he really think he can do a better job? And is that the game plan? It's one thing to take over the Kennedy Center. It's another thing to take over the role as chairman of the Fed. I'm just saying, we got to stop ruling out things as, because we think logically and we think with a little historically and there's certain things that have happened that we're like, hey, this can't happen in America, and it has.
But I guess do you disagree with me that there's a distinction between the rhetorical effort to threaten the default as opposed to the actual ability to consummate the default?
Well, you see, the first level of threats, like the first time he threatened to fire Jay Powell, the market did not like that and took a dive. The first time he threatened tariffs, the market took a giant dive. Obviously, I agree with you long term, it would be virtually impossible, would ruin, it could defaulting on our bonds would be,
the end of America.
Would basically be the end of America. So I'm just bringing this up as a fun discussion topic, but not as something that, I don't sit there like I said, I bought bonds all morning today. I'm not sitting here trading like I think they're going to default. I'm just saying to you, I have a creepy feeling that there is a marketplace right now in, both the US dollar, in the bond market, in different things that are happening that, that are kind of being masked by the rally in the stock market. And I think it's important to have this discussion because you have a very simple-minded president who knows one way out of a debt situation where his way out is bankruptcy.
That's it. That is a fact.
That's it.
Yeah, leverage and bankruptcy is the operating system.
That's right.
I come back to my confusion as to how and why the Republican Party is as permissive as they are with someone that they know what he is. And one of my biggest concern, not just with the Republican Party, is also the Democratic Party. And this comes from a decent amount of personal experience because I worked as a political television host for 3 years at a big cable news channel where the primary job was to be in constant dialogue in public interviews and in private meetings with members of the United States Congress, not exclusively, but a huge percentage of my time was spent in dialogue with U.S. senators or meetings with U.S. senators or meetings and dialogue with U.S. members of the House of Representatives. And one of the most, even among the more, there's some of them are actually very intelligent, very well-meaning people, doctors and businessmen and teachers and professors and whatever they are, brilliant. Some of them are very smart. I can't think of a single one who actually had any true comprehension of how the relationship between tax policy, interest rate policy, and the currency as the basic foundation of how money flows through not only the United States but the entire global economy. Like if you don't understand tax policy, currency, and interest rates, it's like not understanding the substructure of a riverbed. Like if all the money in the world flows wherever it flows, the reason it flows where it flows, whether it goes to these people or these industries or those industries or this country or that country, is entirely dictated by a combination of tax policy, interest rates, and currency. And my biggest concern about the U.S. Congress and their sort of inability to intervene relative to the president is that they actually do not understand exactly how consequential those things are and how dangerous it is to play with the default risk component of the bond market. I mean, it's one thing to talk about inflation risk or growth risk or even or any other sort of demand dynamic in the economy, and it's an entirely different. It's like if you and I, it's like the reason people don't want to do business with like Russians or some of the Southern Italians is like if you and I do business, and I'm like, hey Tom, I want you to invest $50 in my water company, and then the deal goes sideways. There may be the worst thing that could possibly happen is some form of litigation and maybe social alienation. Maybe you're like, I'm never talking to that Radigan again. He took my $50 for the water company and he went to Bora Bora. Or maybe you're like, I got to call a lawyer and sue him. But there's basically a 0% chance that you're going to kill me. Like I'm not considering murder as a business risk in the relationship. And whereas when you do business in Russia, you have to be like, well, is there a chance that someone's going to get killed here if this doesn't go well? Or if you do business in Southern Italy, you're going to be like, well, I don't know if I want to sign this piece of paper exactly because this thing gets a little squirrely. Could have and I just think that now you're basically introducing murder as because not in the literal sense, but metaphorically, sovereign default is the death of the United States as the credible house of all things risk, and the fact that is being introduced as a component of risk.
Okay, then let me ask you this. So on the one hand, you've got, you're basically pushing through your showpiece legislation, your big ugly bill. And in the process of doing that, you've got a crashing bond market and you've got a crashing US dollar. And so what is the bottom line of the cornerstone, your foundational legislation going forward for the next 4 years? It's to increase the deficit significantly. Okay. Now, knowing all this stuff, the argument is, well, it'll be good for the economy. So in the long run, it'll trickle back in some form of, taxes or a better economy, and it'll pay down our debt, when we all know that's,
which, by the way, is an argument everybody, including the Democrats, always uses, which is we can afford this leverage because we're going to grow. This is universal political bullshit.
Sure. Okay. But knowing what we know right now, then let's call it rhetoric, whatever. That was still, this is the massive piece of legislation. Now, knowing all that, okay, how does everybody get behind this universally? How is every single person in one political party get behind this, knowing, maybe they don't understand what a lower dollar means.
I believe.
I understand that's what you're saying, but
I believe I just answered your question previously, which is they don't understand. I'm not even joking. They don't understand.
So along the way, somebody has had to think of, well, how do we get rid of this debt? Do we change our mark-to-market policy on some of the assets that we hold in this country? That's one way. Do we default on certain paper?
Half the things Scott Bessent and Howard Lutnick understand. Only because they spent their lives on Wall Street. There's no way that those two gentlemen could not comprehend.
I don't think you could go to Wall Street and you could find two dumber individuals than Howard Lutnick and Scott Bessent. I just believe, after listening to those two guys talk, and I'd never really heard them much before, but after listening to those two talk and testify, I don't think you can find two less qualified, dumber individuals. And also, they kowtow and suck up to Trump on everything. They don't have any backbone. So I don't think that they actually matter. The only person in this administration that has backbone and the economic sense is Jay Powell. So if you're Trump, of course you get rid of Jay Powell. He's he's the one person that A, is not afraid, and B, is too smart. And so he will speak up. When you have people like Scott Bessent and Howard Lutnick, Trump doesn't worry at all. That's easy. They're in his pocket. What he does worry about are the smart people, and the Jay Powells, the other Fed governors, things like that. That's where his challenges come from. He has no challenges internally. This is North Korea. When you think about that. So that's where we are now. The chances of it happening, zero, basically 1 gazillion of percent over zero, because it would cause everything from civil war to economic collapse and everything else. But when you start to think about where we are and why we're here, it gets to be just a fun discussion to think about outlier stuff, because there are certain things that have happened in the last, 4 or 5 years that should never happen in America. Period.
There's absolutely no question about it, and which is why I'll return to sort of my message to the cable news circuit this week in New York, which is enough about Trump. All attention must turn to the country, America, and its stability and security, and the pressure that needs to be applied to the Republican Party to engage on behalf of America, irrespective of who the president is or what the president does. And until the attention of those who have voice, whether it's in the podcasting and social media world or whether it's in the traditional media world, is applied to the Republican Party, not because and I said this last night on CNN, Trump is not wrong, in my opinion, to want to try to do something for the American worker, to criticize American trade policy, to incrementally want to add a 5 or 10% tariff on lots of things. I don't think that's a bad idea. But when the mechanism of implementation is a chaotic, hyperbolic, and insane structure, and then it's laid over with the history of leverage, this absurd bill, the deficit, the growth story, and all the rest of it, it would be beautiful if you could see the Republican Party come in and say, Mr. President, I like what you're doing, but here's a better way to do it, as opposed to saying, whatever you want, sir.
Who
is
going to do that? Your secretary.
Well, so let me tell you, you want to roll over in your beret?
Sure.
Elon Musk is your only hope.
He's done. He's gone. Your secretary.
He's got.
I know.
He has the platform.
But he doesn't.
He agrees with us. He agrees with you and me. Right. I guarantee if Elon was on this podcast, he'd say, absolutely, I agree. Couldn't agree more.
He also only cares about Elon. So there's a difference. But
it's in Elon's interest not to have a defaulted currency and a lunatic.
Listen, Trump only embraced Elon because Elon wrote him $250 million in checks. Okay, that's it.
You're asking me. I believe that Elon has a bigger platform. Who is it going to be? Gavin Newsom? He's not going to do it. Is it going to be the Speaker of the House? Come on. Is it going to be the Vice President? There's no one in their There's no one in the Republican Party that has emerged to basically tap the brakes.
But one of the things that we glossed over, we say, hey, this can't happen. But the Secretary of Defense was a Fox News host. Just think about that. The largest military in the world, and the Secretary of Defense was a Fox News host. You've got people. The health secretary doesn't believe in vaccines. I mean,
that's not true. The health secretary believes vaccines require research. I like the health secretary at the end of the day. I'm sorry, but
you're out of your mind. You're out of your mind.
Okay.
But it doesn't matter. Okay. My point is I can go down the list and from one to the ninth. One for the edge. How about this? The Secretary of Education can't read. I mean,
that is bullshit. The Secretary
does that matter to you?
Can read. The Secretary of Education can read.
I don't think so. But it doesn't matter because my point is you kind of get the gist of this. And the point is I just wouldn't assume things. We used to be able to assume things. I don't know that we can assume things anymore.
And I totally agree with that. And I think that the markets, although I'm going to contradict myself.
I mean, we used to be able to assume logic would win, and it doesn't necessarily mean that.
Although it did win with tariffs.
What do you mean?
The tariffs never happen beyond the 5 to 10% threshold.
Yeah, well, with Trump, it's the tariffs.
But my point is maybe logic does win. The president Trump did leave the White House, and Joe Biden did come in. The tariffs haven't been implemented. I think that Donald Trump spends most of his time producing a television show that's extremely thrilling and exciting and horrifying. As it's the President of the United States reality edition. But the actual execution and implementation is consistently much more moderate or non-existent than anything that happens on the TV show.
Do you know what I worry about? I worry about when his golf game falls apart, which will probably be next year when he turns 80 or whatever. Sure. When his golf game completely falls apart because he can't see the ball anymore and he just misses and he gives up golf, then he's going to have way too much time.
And he's not going to have more ideas of things to do.
Right, exactly. More crazy ideas.
More thoughts.
He's not going out without a bang. Let's put it that way.
Yeah, unfortunately, that's true. So, but from a trading perspective, you like the bond and the dollar because you think that actually that the risk that we're discussing is actually priced in.
I think that the risk is priced in. I also think that as a contrarian, there are no other plays on the board. I mean, as a contrarian right now, I don't know how anybody can be short bonds here. It's just, as a contrarian, it makes no sense. And that's why I'm long them. And as a contrarian, I've been bearish on the dollar for 2 years. But right here, I don't know how you could play the dollar to the downside anymore. It's gone too far, too fast, and it doesn't make any sense. There's no risk reward with it. So I think what you're going to see potentially here is a softer stock market and a stronger dollar and a stronger bond.
I agree. I mean, would you go so far as to do a full-on pairs trade and sell some call spreads and that, or you?
No, because there's so much money. It seems to be so much money that there just seems to be an endless supply of money, and I just don't know how much the stock market. I don't know what it's going to take to attract sellers into the stock market, but I don't see it yet.
Mm-hmm.
Like, I don't see anybody with their finger on the trigger. Let's put it that way.
Mm-hmm. But long bond, long dollar, more comfortable than short stocks in any particular
I think
fashion.
So. Yeah, I think so. Dylan, that was great. Thanks so much for the active participation.
You're an alarmist. You are an alarmist.
I'm not really. I just felt like doing that today. Just something different. I never go that way. I'm usually inside the curve, inside the distribution curve. Today I decided to go outside of it.
Can I just one last question before we go?
Sure.
Could I get a currency adjusted increase in my compensation?
Absolutely not.
Fine. I'm going to stick to the spaghetti, and I'm just going to wait for the dollar to turn around and get myself. I'll give my steak eating days are they'll come back. They'll come back. I don't need your money.
Your request has been noted.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.